Metropolitan has reported an increase in annual profit. That as operating profit and normalized headline earnings per share jumped by 69% and 48% respectively. The insurer says it has benefited from a resilient business model amid a challenging operating environment. Momentum CEO Jeanette Marais joins us now for greater detail on the numbers. Thank you so much for your time, Jeanette. Talk to us about the level of growth that you saw in this period.
Yeah, thank you very much for the opportunity. I must say it really is a set of very pleasing results for us. And I think two numbers that really stand out. First one, obviously, is the numbers that you've just mentioned. Also, our normalized headline earnings, which is also increased by 42% to 2.4 billion rand for the half-year period, which really is, a number that we're very proud of. I think secondly, and maybe this is the one where I won't say we were surprised because we worked really, really hard to get there, but one that we are very happy with is our new business sales numbers, which has increased by, double-digit numbers, more than 18% over the year. And I think what in terms of our results is most pleasing for me is the fact that every single one of the 8 business units in our group have actually made a substantial, a really substantial contribution to our earnings. Normally, when you have a big portfolio of different businesses, you do find that they're a little bit out of sync. Sometimes, some have problems and some do better. But when all of them fire on all these cylinders, you do get the kind of results that we have been able to declare today.
Well, let's actually go into those new business dynamics, because you mentioned the growth in the new business sales numbers, but I also saw that the value decreased and the margin also narrowed. So just talk to me about that.
Yeah, so while our earnings have improved and while our new business sales numbers have improved, the high cost of acquisition, of acquiring new business, have really placed our new business margin under pressure. And, the elements that make up your value of new business or your new business margin really is your new business pricing. Now, in a very competitive market where your consumer is under pressure, it's very hard to say the way to make up for this is to just increase your prices. So, very competitive, and there's a very thin margin where we can move to increase prices there. So maybe that's not the solution that you're looking for. Secondly, it's what we call improving the sales mix. That simply says sometimes in a big business, there are some of your products that you almost use as loss leaders. You sell them because they cover cost, but they're not necessarily, huge margin products. And then the last one is the cost of acquisition. Cost of acquisition really is about making sure that, firstly, your advisors are productive. Per head, they have a certain level of productivity, but also that they write quality business that then also stay on the books and don't lapse. Now, those are the kind of almost the balls that you need to balance when you look at something like that. The one business that have really shot the lights out in terms of new business margin is our investments business. And what's interesting there, I think it's also a symptom of what's happening in South Africa at the moment with high interest rates and with a lot of uncertainty. Clients are looking for safety. So we have seen literally a 55% increase in the sales of the more old-fashioned life guaranteed annuities, because people get to retirement age and they say, I cannot take any risk with my money. Tell me what you're going to pay me as an income, for the rest of my life. And we've seen a fantastic increase in our sales, for living or for life annuities as well.
Yeah. Jeanette, let's delve into your capital efficiency effort. What are your priorities there in the short to medium term?
Yes, so you know what? I mean, the one thing that Risto Katola, our financial director, said today is that we are one of the companies or one of the life insurers with probably one of the, most healthy balance sheets, which really says that, I think what is important for a consumer, when a consumer buy a policy from you, they need to know that you're going to be around for the next 30 or 40 or 50 years. If it's a life policy, you buy it for the rest of your life. And then it is important to look at whether companies are firstly well run, but they have a big balance sheet to sustain them through tough times. And I mean, we've come through COVID, with still a very healthy balance sheet. But when it look at specifically how we manage our capital, life companies are very capital generative. So you always have a lot of capital and you need to think what to do with it. So on the one hand, what I've just said, our reserves are very healthy, but at the same time, this time around, it's given us the opportunity to not only pay a quite healthy dividend, 20% up on our dividend from the last time, 60 cents per share, but we've also allocated another 500 million to buyback of our existing shares. And you do that because obviously at the moment, that's almost the place where we get the best return on equity for our shareholders, in the region of 16, 17%, because our share price is actually trading at a lot less than what we believe or what the real value of our business is.
Yeah. Well, we did see your shareholders smiling today with that stock climbing after those numbers. Thank you so much for your time and giving us insights on those numbers, Jeanette. That was Momentum CEO Jeanette Marais.